Yes! I am in my jammies still. Oh my goodness, it's almost time for me to get my kids from school and I'm still in my nightgown. Don't you love that? So let me tell you this hack. So I go to Walmart and I go shop in the little girls section. I got this nightgown for like $1. Yep. That is not what I have to share with you today. But it's all about finding what you need, and sometimes you have to hunt for it. And for me, with my tax liens and deeds, like one of the biggest fears that I had, and like the thing that like kept me from like moving forward, was how do I structure this legally? How do I protect myself? How do I protect my assets? How do I make sure that I am setting this all up correctly for taxes? Like that kept me from progressing. So I want you to be able to kind of have a sigh of relief. And I hope this helps you. I hope that you can see my structure. And do you want to see the curtain come off right here? You get to see like behind the scenes of my organization. You want to? Nah, you just don't seem that interested. Oh, what? Yes, that's it. You want to? Okay, so here it goes. Ready? That minus reflection of the window in the board. This is my organization, and this is my son. One of my sons wrote this. He's one of my middle. I have 4 sons and 4 daughters, right? So this is, anyway, I love you, Mom. And I just didn't have the heart to erase it, so I just wrote around it. So actually I feel like I'm a weather girl. So we've got some storms coming in with some high pressure that will create moisture and blowing. Okay, that was fun. Sometimes it's like, I don't know how they do it with the monitors. You know, the monitors are green screen. Well, this green screen, and they have to look over here at the monitor because the green screen doesn't show anything, and they have to like, yeah, I don't know. That's crazy. I can barely do this. Okay, so let's get at it. So for me, it was so important for me to understand and learn that there's 2 types of income, right? There is, where am I here? Active income, where you're actually being active in earning that income, like you're fully participating personally in the gaining of that income. And then there is passive income. This is my favorite right here. That's my buddy. Passive income is where you pretty much just invest money and you get some kind of dividend, or you get interest, or you get appreciation. You get something in return for literally doing nothing but giving capital. So anyways, wow, this reflection, that is fierce. I am going to turn these blinds down so that we can actually see and see if it'll make a difference. Okay, all right, and I don't kill myself on this blanket. Okay, no, that was a negative. That did not help. Okay, you're gonna have to just bear with me. Okay, so right here is the S Corp. So it is an LLC, and I live in Colorado. So for me, they set up a Colorado LLC, and then they designated it for tax purposes as an S Corp. And you do have to do that designation on a standard form, an IRS form, right? And you have to file it so many days after creation and blah, 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 blah. So make sure you know what your deadlines are so you don't miss out on the opportunity. So the beautiful thing about an S Corp is that it really is used only for active income, because it doesn't give you the protection that you need for to put your passive assets in here. Okay, so I digress. I need to get focused and come closer, I think. Okay, so for me, I have 3 businesses that are disregarded and flow down in here to my S Corp. These businesses are single member, and the only member is my S Corp. And then my husband and I are the members of this S Corp, the only 2 members, and I am the only manager. So I can sign personally for this S Corp in any of these businesses because I am the manager and I'm the managing member of this right here. Okay, so the beauty is that these guys don't require tax returns. They all flow down into this. It's kind of like your Schedule C, where you don't have to file a specific and separate tax return for your Schedule C businesses. They're just on your 1040 and they flow down, right? You pay your for the income, and your expenses come off of the income and all that jazz. Okay, so another wonderful thing, my favorite here, get close here, come on, get closer. There, that has a heart around it because I love it so much, and that is my solo 401k. So, you all have a 401k, maybe, hope so, probably, from your W-2 job, and the beautiful thing about solo 401k is it is meant for small business owners like me who have no employees. And the government rewards us because they're like, oh, you sad saps, you have this business, this sad business, and you're the only one in there. So we're going to give you special privileges to be able to stockpile it with cashola for retirement. And that's what we're doing. So when these businesses make money, income flows down here, and then because it's an S-Corp, we go ahead and get hooked up with a payroll company that puts us on as employees, and then we get paychecks, and out of each paycheck, we can run a deduction we can take out for retirement. And so you can take out 100% of your salary up to, well, for 2022 is up to $20,500. So each one of us, even though it says no employees, it means no employees outside of like the partners, right? The spouses here. And let me just, that was me like doing the record screech. Okay, I am not a CPA, and I am definitely not an attorney, and I don't even play one online, on TV, online, on nothing, okay? So go check with your people on this. This is how I'm understanding it from my people, and I am just giving you the so that you can go get extra information and do the due diligence that you need. Okay, so I can take this, my salary from here, and I can load it into my solo 401k up to $20,500 per year. Well, they up those max contributions amount every year. So that was for 2022. And my husband can do the same, and we can contribute to the same 401k, solo 401k, okay? And then that solo 401k, okay, this is the magic right here. Okay, so this solo 401k can then invest in many different things. There are some disqualified transactions, and there are disqualified people that you can't do business with because they're too close to home, right? And the IRS is like, something smells fishy, and no, yeah. So know what you can invest in and know who you can invest with. And for me, tax liens and deeds, you can invest in. Real estate, you can invest in. You could even lend private money in there, okay? So say I lend 100 grand out, and say I make $30,000 a 30% return over 3 months. So now 130 comes back in here, and I've just increased my retirement fund by $30,000 in 3 months. And then I just take this 130 and I loan it out, and then comes back 150 or 160. And then I loan that 160 out, and it comes back 190, and it just keeps going back. I can't personally take any money from this because I'm not of the age of retirement yet, and I will get penalized and I will get flogged for it. I will get tarred and feathered by the IRS, and we don't want that. But the great thing is this does not need to file a tax return until it gets up to $250,000, and pretty much the government just wants you to be just reporting totals, okay? Because there's no taxable event that happens when money is going in and out of this. And it's not distribution-wise. We're just talking investment-wise, okay? And then in here, you can have monies that are Roth monies. You can have contributions that are Roth or traditional. You got to have separate bank accounts, or what we call little buckets, so that you can keep track and have good accounting. Yes, there is some work involved. And it's good to know that you know your numbers, really. You need to know where your monies are coming from, where they're going, and then split it all back out when it comes back in house. Okay, moving right along. So we did our active income here, and my arm is getting so tired. I need a cameraman. I need a boom so that like I can, not be it. I'm like holding up my arm. And so if it's shaking, I'm sorry. I apologize. I need to work on my weak bananas. I know. Okay. So here we are. Passive income. Passive income is, well, it's sitting on the couch or on the beach and just your rents are coming in. Yes, please. Can you say, I love passive income? Yes. Okay. So passive income. For me, we set up a Wyoming LLC that was taxed as a partnership. Okay. That means it's a 1065 return and it's due on March 15th. And then also K1s. That breaks down the partners and lets them know all the goodies that they received or did not receive every year, right? And the S Corp, that filing is a 1120S, and it is also due on March 15th, and it also produces K1s to the partners. Okay, next. We chose Wyoming because Wyoming has some really investor-friendly rules. And well, we could have done Delaware and we could have done Nevada, but they're expensive. So we choose Wyoming because them cowboys, we love. Them cowboys, they live a simpler life and we just love them for that. So, okay. So Wyoming also has charging order protection. And that is really important so the people that don't come onto your property and stub their toe, or I don't know, you accidentally had your kid out back shooting BBs and it killed the neighbor's dog and they sue you and then they're trying to get your business now and oh my gosh. So charging order protection is very important, and that's why we like Wyoming, because of the asset protection and the anonymity. So they don't reveal who owns these LLCs, who's involved. And so when you have anonymity, it keeps nosy neighbors out, pretty much. Like, you can't stay here, but you got to go somewhere else. All right. So then we have this partnership, and here are the disregarded entities. So we have my Colorado Rental LLC, and then we have a Alabama Rental LLC. So in here, I've always been taught one property per LLC. And I know you're like, yeah, that's so that the attorneys can get rich off of, drafting agreements and setting up entities. Well, yes, yes, yes. And it brings in a lot of funds to those states for formation costs and periodic report fees. And well, here in Alabama, they love business owners so much that they give us the privilege of doing business there and therefore charge us, it's called business privilege tax, with a minimum $100 per year cost to that fee. So, and the wonderful thing about Alabama and a couple other states too, is they have what we call a series LLC. And the series LLC is, think about it this way. The master series LLC is like an egg crate, right? And the individual spaces for the eggs is like the cells, and the eggs are the properties. So you take the properties, the eggs, and put them into the individual slots in the carton, the cells, and then the whole carton itself is the series LLC master, right? It can also be referred to as parent and child. Parent is the master, the child is the cells. I think that just sounds silly when I'm talking about eggs and children. I'd just rather call them cells. Anyway, so what the LLC does, the series LLC, it allows you just to pay one time for this, for setup and annually ongoing reports and whatnot, but you get the awesomeness and of being able to string all these properties along inside this series LLC. And so instead of having, I have 17 properties in Alabama, instead of having them individually, in LLCs where I'm paying maybe $200-300 for setup and another $120 for ongoing annual stuff, that really adds up, and it's just more headache, more filing and paperwork and all that nastiness. So this really cuts that down, being able to do the series. And the wonderful thing is, if someone comes in and stubs their toe on this property and wants to take me for all I'm worth, all they can do is get access to the property in that cell, okay? And there's minutia, there are specifics, like you gotta make sure your accounting is clean, folks. You gotta make sure that it's just not all grouped together, that you're showing an active effort, that you are treating these like separate entities, right? Or else then the court can come back and say, well, actually, you don't even know what cell is making what, and therefore we're just going to say that it was an alter ego and it really is just one LLC. And then all of a sudden, all 17 of your properties are at high risk because you weren't careful. So be careful. Okay, so the next thing over here is you have the living trust. So the living trust is that estate planning. And so you have this coming down here, and then you have this land trust. So if you have a property that you live in, your personal residence, you cannot put it in an LLC, right? You cannot do that for asset protection and anonymity. It doesn't work. But you can get what's called a land trust, and you can deed your personal property into the land trust, and that land trust then flows into the living trust. And this land trust then now, when someone goes on the county and is snooping around to see what your house is worth or what property you own, it's not going to show. It's going to show that it's titled in the name of the land trust. And usually the land trust is titled in the name of the property address, like 123 Main Street, right? Very innocuous, is that right? Super, like, my husband is a Miami Hurricanes fan. Like, he loves to like name everything about the Hurricanes. Well, if we named this trust like I love Miami Hurricanes, like that would not help us with anonymity, right? It wouldn't, because they'd be like, we know that's yours. So you want to have just something super generic and not creative. So there it is in all of its messiness, my structure for my organization. Whew. My question is to you, where are you starting? Okay. Remember, I didn't do this overnight. Actually, I made a huge mess of all this stuff, and then I had someone help me clean it up. And I tell you, it's better to just make the mess and then be forced to clean it up than to never start. Okay? Because if you're thinking to yourself, I got to know everything, I got to be able to figure out A to Z before I start, you freaking won't start, and you know it. And you haven't started, and you know it, and I'm calling you out about it, okay? So make a mess, and then go find the person to help you clean it up. That's what you need to do. So what messes are right now are you working through? Let me know. Do you think this is crazy? Am I insane? Well, don't answer that, because we already know the answer to that. But anyway, hope that like gave you some value. Hopefully that gave you a little bit of perspective, maybe open your mind just a little bit, and now you got to go fill that gap. Go fill it. Go get some, expert advice. Go on YouTube. Oh my goodness. If you want to know who helps me with this, and it's not just some guy local, it's a company that like helps real estate developers and investors in particular. And they're super reasonable, like incredibly reasonable. So if you're interested, just let me know. So other than that, hope you have a really great rest of your day. And I need to get my arm a rest. It's insane.